Hey traders, welcome to the Raghee Report for Sunday. Great to see everyone. All right, hope everyone's having a good weekend, and I imagine some of you, like myself, are gearing up to watch the Super Bowl here in about a half an hour. So as always, questions are welcome, encouraged. We are going to take a look at the economic calendar to kick off this session. Like we do, because preparing for the coming week is really about preparing for not only price action, but what are the influences on price action. And we're taking a look at the trading economics calendar here. And you'll notice that we have Monday morning, 8 a.m. So this is going to affect my futures traders, pre-market futures traders, 8 a.m. Eastern. We've got a Bowman speech. We've got consumer inflation expectations. And I'm going to make sure, I know a lot of you are used to seeing this on Forex Factory. So if you're taking a look here, you'll see 8 a.m. Bowman. There are hot zones that you're going to see on trading economics that you're not necessarily going to see on Forex Factory. I will say your more mainstream hot zones are going to be on Forex Factory. That's usually going to be the case. Right? But, I just wanted to change it up a little bit, make sure everyone's looking at both. We've got on Tuesday, more Fed speak from Logan and Williams. Of course, I'm not overlooking the hot zones. We have inflation rate. Those are going to be big numbers, gang. Obviously, 8:30 Tuesday morning, it's going to be huge. Rolling into Wednesday, pretty quiet on the Fed speak, right? As you can see, we get a little bit of break from the FOMC chuckleheads. But then on Thursday, we've got core PPI. That's going to fall once again into the inflation column of macroeconomic impact. So keep that in mind in terms of when you're looking at what's going to affect what we are expecting in terms of the remaining 2 to 3 rate hikes. How soon will we get there? Are we likely to see 2 or 3? The data is going to be a big part of that. So obviously, looking at things like CPI and PPI are going to be massively important. And then, of course, with that kind of data, shocking, we have Meester, we have Ballard, we have Cook, and we have Meester again, as if hearing from her once wasn't enough. All right, so we've got that pretty busy calendar going into Friday, where we finally get Barkin in the morning and then quiet. So again, remember, gang, lots of Fed speak. And this is going to definitely be something that we need to keep an eye on. And if you're day trading, remember, you may not want to be in a short-term time frame trade, 5-minute, 2-minute time frame, where sort of the shock absorbers on a short time frame like that are not necessarily equipped to handle sort of the rough terrain, the off-road terrain of FOMC speaking engagements. And then if you're looking at an hourly time frame, if you're gonna look at a longer term time frame, as we've been doing a lot more as of late, that's going to be able to handle a little bit better some of these high impact events, as will, of course, the daily. So think about which time frame you're using, and is it best suited? Is it well suited for the kind of events that are on the calendar? All right, so let's kick it off here. And first question is regarding put call ratios. So PP family, I do not look at put call ratios. So are there implications on market movement? As far as I'm concerned, I don't look at it. No, I don't believe there are implications of market movement. And this is not a new opinion. This is one I've had for decades. I further believe, because of the put call ratio being so affected by zero dated options, there's almost no, for me, bearing. I don't even look at it unless somebody asks me about it. And then I say, look, I don't even look at it. I don't find them in the least bit helpful. So I appreciate the question, but something that I don't use, and for many reasons, mostly because zero dated options have made them incredibly skewed. I don't use them at all. So if you're noticing, anyone out there, that put call ratios are just not really all that helpful anymore, there's a really good reason. They were never that helpful to begin with, and they're really increasingly reflecting the volatility, well, the liquidity and what's happening with zero dated options. All right. Christopher Price, good evening. Thank you for I appreciate that. Thank you for tuning in, everybody. I always appreciate that. I struggle on the concept of the DJI average being confirmed by the DJT. Can I please help explain its uses for the S&P? Oh, okay, yeah, sure. You know what? The best way to do this is something a little bit different. All right. And this is really at the heart of what we do in the Sector Secrets Mastery, which is we trade stocks, we day trade stocks and futures and ETFs, and we even have longer weekly positions. Uh, but everything's built on an understanding of why things move. And a lot of the why, as of late, has to do with weighting, stock weighting, sector weighting. I'm going to show you here. Here's the Dow Jones Industrial Average. So this is YM, this is DIA. Now let's go to the holding analysis and charts. I'm going to show you something here. Take a look. I know it's a little small. Let's make it a little bit bigger there. Take a look. Number one sector, finance. So the question is, DJI being confirmed by the DJT. That's very much in the spirit of Dow theory, which I am a huge fan of. Those tenets of Dow theory affect nearly everything I do, except for that one. And here's why. When Charles Dow first, and let me see if I can't find this. When Charles Dow first introduced the Dow Jones Industrial Average, and if you want, you can look history of Dow stocks. I think it's something like that. And it might be on Wikipedia. It's a historical look. Yeah, here we go. I love this. Y'all are going to love this. This is going to answer the question. If I scroll back to the very beginning, 1884, the Dow Jones Industrial Average has been around that long. Let's just get into the 1900s, shall we? Look at the companies that were here. Remember, this is the Dow Jones Industrial Average, as in, yes, Charles Dow. Look at what's here. U.S. Steel, Federated Steel, GE, American Steel and Wire, American Cotton, smelting, copper mining. Let's go into the 1920s, the 1930s, right? Now you've got American Can Company and trucks and Nash Motors and Chrysler, General Motors. Okay. You got a gist of what I'm saying about 100 years ago, over 100 years ago in some situations. Let's go to now, 2020, Amgen. Do you think Charles Dow ever thought Amgen, a pharmaceutical company? Walt Disney, Visa, credit cards. Okay. Travelers, more finance. Salesforce, tech. All right. What else do we have here? Sure, there's IBM and Coca-Cola, Apple. This is a very different composition of the Dow. And this is why I say that no, we cannot now. If you and I, Christopher, were trading in 1930, 1940, even in the 1960s, the Dow tenet that the transports tend to lead or confirm, however you want to look at it, the industrial average was true because the composition of the Dow. Go back 100 years. Compare August, or just compare 2020 weighting stocks that are in the Dow to 1920. They look like two different markets. That's why we don't do that. That's why I do not recommend doing that. It simply doesn't work anymore. But as far as the S&P, now let's leave the Dow Jones transportation out of it. As far as the Dow and the S&P, their overlap now is going to occur. And I'll show you one other thing here. This is really cool. Again, if this kind of stuff fascinates you all, think, yeah, Rog, this is the kind of stuff that I feel that if I knew, I'd have a better idea of why the markets are doing what they're doing. And by the way, you would. This is exactly what we do in the mastery. So exactly what we do in the Sector Secrets. Let me show you a little bit more. Holdings for the Dow, DIA, SPY. Take a look at where they overlap, right? And they do overlap. And mostly they overlap in terms of financials and healthcare. And that's where you can understand better where the Dow and the S&P are so sympathetic to one another and why. Healthcare and financials. And that's where that relationship does overlap and is able to many times buck the trend of tech and transcend maybe whatever is happening in tech. When the Dow moves with an S&P, that's why it's doing it. All right. Okay. Next up is, and thank you for the question, Christopher. All right. David asked, thoughts on the XRT? Oh, okay. For a buy the dip. Sure. Let's go take a look at XRT. All right. Taking a look here at the XRT. And don't worry, gang, we're gonna definitely wrap up before kickoff. We might wrap up a few minutes before kickoff. So if you have a question, please type it in now. I'm probably gonna wrap up a little early so I can get a good seat at the couch in front of the big screen. All right. Who here is rooting for the Eagles? Who here is rooting for the Chiefs, or like myself, just rooting for a good game? It is going to be a good game. It's probably the first time in a long time I'm actually quite excited about the matchup without any real stake in who's going to win, being pretty much at birth a lifelong Patriots fan. All right, XRT, is this a buy the dip? I think you're definitely in the right market trend in terms of the structure. The market trend, it means the same thing. What's the structure of the market? Bullish, bearish, neutral? Definitely bullish. David, spot on. And then what do I want to do here? Tell you what, there's two things we could do. One, use the 200 propulsion. Two, use the 34 EMA wave as a as a mean reversion, or we have a third option here, and it's an aggro one, 21 propulsion. Where's the 200 EMA propulsion? Where's the 21 EMA propulsion and the mean reversion to the 34 EMA wave? We want to be a buyer. It just depends on how aggressive you want to be a buy the dip trader. How aggressive do you want to be? So you've got a lot of choice here. I'd say 21 is your aggro. 200 would be something along the more conservative, and anywhere inside the wave is going to be valid. And I'm looking at that through the propulsion, the wave, and of course, confirming all that with the multi. All right, next up, we discussed Citi in the Sector Secrets Mastery Room. We sure did. Would I compare Schwab? Oh, sure, let's do this. Let's do another thing we do a lot in the Mastery. And by the way, I don't know how many of you know how to check out what we're doing in the Mastery. Okay, the Mastery is a bit of, it's really very much, in some ways, not to be over dramatic, but it's kind of a dream come true, because what I get to do is share everything. We're going to be talking about what we've been doing in the Mastery. Probably one of the things I'm super stoked about since September of last year. We've been putting out weekly setups. And give or take, we have a brand new weekly setup we sent out last week, which is already up, I think, 5 or 8%. We've got 3 positions we built last year. Again, these are weekly timeframes. Each are up anywhere from 15 to 20%. So, when you look at your portfolio and say, hey, I don't know that I've got things that I bought last year that are up like that. Maybe you do, maybe you don't. That's really a huge part of what we do. And I'm really proud of, frankly, the members who kind of really, if I say we're going to day trade the first hour of the day, that's exactly what we do, 9:20 to 10:35. And then after that, we put on a different hat. And I think for a lot of traders, putting on different hats can be difficult. So some traders just jump in. Okay, Rag, I'll jump in when you're talking about swing or macro or whatever. I'll take advantage of all the different sessions. But if you can get to a point where you can be a day trader at a certain hour of the day, if you can focus on swings after that, and then if you're able to say, yeah, I need to keep up with my longer term portfolio, that's really, for me, where you become a well-rounded trader and, a little bit of investing. So part of that is kind of what Jack is asking, which is here, we're going to look at a multi-trend. And the multi-trend in the XLF is really easy to put together. This is just a flexi chart, flexi grid on toss. And I put the high concentration weighted stocks here. So the idea is comparing Citi and Schwab. I was interested in Citi, still am interested in Citi. Jack, in the Mastery tomorrow, we'll probably take a look at one of the price patterns that I use to get in. But frankly, it's JP Morgan, Bank of America, Wells, Morgan, and American Express that have better bullish structure along with XLF itself. We might want to go with the tide over an individual boat. And those are decisions we'll definitely make tomorrow in terms of whether or not we want to go with XLF and take advantage of so much of the strength and or neutral market action that we're seeing above the 200 propulsion, which in and of itself is bullish, or whether or not we just want to find an individual stock that we like the structure of because it's bullish and because it's reverting to the mean and giving us a great opportunity. Bank of America's definitely got my attention. You're wondering, okay, Rod, give me a for instance. I think Bank of America is definitely doing some cool things that we'll dive a little bit more into tomorrow. Schwab, I'll pass on. Citi, I would still put near the top of the list for something I'd be open to buying. Thanks for the question, Jack. Hey there, Mr. Walker. Will earnings stop me from trading a 1-hour chart? What I'd like to do 2 days before earnings, I'll probably cool it on the 1-hour chart, Mr. Walker. But generally speaking, any earnings trade becomes sort of just a yellow light, a caution light, once I'm inside 2 weeks to earnings. Because remember, I'm a buyer of puts and calls. I'm a directional options trader. And that means that as we get closer to earnings and implied volatility increases, the scales tip in favor of those traders who sell premium. Now, we have some folks in the room who understand momentum and this increase, and they know directionally how to play their advantage, even when they're selling premium, but it's not something I tend to do. So I will say about 2 days before, I'll say, you know what, not worth it. A lot of unpredictability, implied volatility is increasing. So I will say thanks, but no thanks. Yeah, thanks, but no thanks. Thank you for the question, Mr. Walker. All right, next up, can I take a look at CF? Sure. CF, below the 200, it's just coming out of a downtrend. It's nearly overbought on the stochastic. I'd be a little bit more bearish. Yeah. Captain Jane asks, is bad news now bad news again? No, not yet. Captain Jane, I love the question. I think we're getting close to that point because we're almost at the end of this tightening cycle. However, we're not sure where we're going to end up. So good news is still bad news. Bad news is still good news when it comes to whether we're going to get 2 or 3 more quarter point hikes. And that's the way that I'm going to look at that. So yes, I think we're still in that goofy time. And Captain Jane says, rooting for Rihanna. Go Chiefs, says Mr. Walker. All right. All right. Next up is Tesla. Again, if you have any questions, type them on in. And by the way, gang, for those of you that may not know, and this is something that I'm going to start doing as of tomorrow. Bear with me here. I'm going to bring up my website, the websites again. We're going to go over to the Simpler Trading YouTube channel just for a moment, okay? If you head on over to the homepage, you'll see, what live events are coming up. And in the interest of not having to post out so many show links and say the free room or my sector secrets mastery, I'm going to recommend that everybody do one of 2 things. If you're already subscribed to the Simpler Trading YouTube channel, great. You're going to be notified of all the different content. If you don't want to be notified of all the content, and I get it, you might say, Rog, I head on over to that channel on a regular basis. And you just want to be aware of when I'm going live with a Raghee Report or with a Charts and Coffee, you can then go ahead and subscribe to my channel. And I broadcast to both the Simpler Trading and my personal YouTube channel. So whichever one you want, but I'm not going to be posting the Raghee Report or Charts and Coffee in the rooms anymore. So if you are a member of any of those Simpler Trading rooms where in the past I've sent those links out daily, I'm not going to be doing that. And the easiest way to keep up is just subscribe at Raghee Horner at YouTube or at Simpler Trading at YouTube. Okay. So just a quick heads up on that. All right. Next up is Tesla. Is it buy the dip? All right, let's go take a look at what we've got here on Tesla. All right, if I'm looking at Tesla, hang on here. I just turned something on and I didn't mean to. There we go. All right. So if I'm looking at Tesla, first of all, buy the dip is valid when we have a trend. So absolutely, I'm with you. We do have a trend on Tesla. So John, spot on. Couple ways we can buy a dip. One is the dip that I define with the wave, which is way down here. You see that normally in a green trend, I'd be waiting for a mean reversion, which is that 34 EMA wave for me. One of the things that we now can do that I couldn't do, and we've been testing this, gang, for 10 months. Now, I don't say that to impress anybody. I say that because whenever we have a new indicator, we try to break it. This is a process, the DPMRs, that I've had for over 10 years. This is nothing new, but the automation and the data curation and the data itself is far improved from what I started out with over a decade ago. And what I could do now is say, look, even when we don't revert to the mean, is there a level from which we can be a buyer? Well, you tell me. Overall, as the green grab candle started dominating, did the gray area do a good job of catching falling prices and offering support? I think when you look at it, it sure did, right? So we may not have a mean reversion, but we sure do have volatility reversions, if you want to look at it that way. So buy the dip, yes, I do like that idea. One thing I don't like, and really, John, only one thing that I don't like, Tesla is still below on the daily time frame, which is where this is most pertinent. Tesla is still below that all important equator. It's still below the 200 propulsion. Okay, so that's something that we want to remember when it comes to what could affect our opinion and the way that we're going to trade Tesla. Okay. That just means that's going to be an upside target, quite frankly. And you can see how effectively that acted as resistance on February 9. All right. All right. A sub doesn't automatic. Oh, yeah. You got to click the bell. Yeah. Bot's reminding me. So, yeah, even if you sub, you still got to click the bell. Yeah. You got to click the bell icon. I keep forgetting that. Yeah. So if you head on over to YouTube, make sure you subscribe and click the notification icon. Click that bell icon. Yes. Thank you, bot. Thank you, bot. Okay. This is why everyone needs a bot, right? All right. We're going to wrap up in 2 minutes, gang. 2 minutes. We're going to wrap up a little bit early for the game. All right. Miles is rooting for the Chiefs. Who here remembers that Snickers commercial when the guy's putting all the paint down in that beautiful field? And one of the players walks over eating a Snickers bar and he says, looks great, but who are the chefs? Yeah, I always remember that. The Chiefs are always going to be the chefs. Always. Great commercial. They should play that today. And it's a nostalgic, classic, awesome commercial. Who are the chefs? All right. Is there a pattern to the daily price ranges based on the day of the week? Why do I use DPMR based on the day of the week? Sanjeev, we're going to get a lot more into that on the 23rd as far as the curation of data. But what we do is, yes, we're looking at a historical look back. Why do I use day of the week? Because every single day does present a different nature. Monday is not like Tuesday, and Tuesday is not like Wednesday, and Wednesday is not like Thursday, and Thursday is not like Friday. And Sunday is its own wild little thing. So it does matter. It does matter. And we get that specific. So it's very different than, say, it's ATR cousin. A lot of people say, well, what's the difference between this and ATR? A lot. It's a Grand Canyon amount of difference. But we'll talk a lot more about that on the 23rd. I will not leave any stone unturned. We are going to discuss the current market, the daily price movement ranges, place in that, what Lorna and I have been testing for 10 months, what we have found is working. My sector secrets, folks, you already know. We're doing a little bit of that in the room already, just to give you all a sneak peek. So, Sandeep, thank you for the question. Save the date, gang. Yes, we did move it out 1 week so we can dial it in. And I think we're just about there. So we're going to be seeing you on the 23rd. Gang, It's 6:25. Games kickoffs in what, about 5 or 10 minutes. Thank you as always for joining me for the Raghee Report. I will see you all tomorrow morning, either at my Raghee Horner YouTube channel or the Simpler Trading YouTube channel for charts and coffee, as we do Monday through Friday, 9 to 9:20 Eastern. All right, gang, be good to each other. I'll talk with you soon.